this has been kind of a disappointing year, especially that we finished 2024 at about 10-year average level, so normal activity. Everything got upended once the talk of tariffs and the potential damage of tariffs was sort of being discussed. Whether or not we're going to have a recession this year. That caused all markets in Canada, home sales in all markets, to decline pretty sharply. But most markets, even in BC, have started to recover in the second half of the year, and Metro Vancouver just hasn't joined in on that recovery at the same rate.
And why do you think that is?
It's a great question. It's one where we've been testing a lot of different hypotheses over the last couple months. Nothing really hits. It's not necessarily affordability. Like we certainly saw the effects of uncertainty really compounded by inexpensive markets. Like expensive markets got hit a lot harder by that uncertainty shock. But, Victoria is expensive too. Affordability hasn't really changed much from the end of 2024 to now. It's actually a little bit better now because prices are down a bit and rates are down a bit. So that doesn't necessarily explain why Metro Vancouver is not coming back. It could be net migration is because of federal government policies is negative. So population growth is quite slow. That means like investors are fleeing the Metro Vancouver market because rents are coming down, and there's a number of regulations that were put in place this year that make it less attractive to be an investor. Maybe that's part of the issue. It's probably a multifactorial kind of thing, but there's no one thing we can point to right now that explains it.
Is the fleeing of investors, is that good for home buyers?
It depends on the market, right? So like if you have a market that's overheated, you have a lot of investors and they're driving demand in an undersupplied market, that can be unhealthy. But we need investors for rental units a lot of the time. We've gotten back to building purpose-built rental, but there's still a really big part to play for this like secondary units from investors. And if they're not going to be in the market, it's harder to provide rental units.
And I guess when we hear headlines about, just yesterday we saw, a pulp and paper mill cut 300 jobs on Vancouver Island. We've seen, steel mills in Ontario laying off 1,000 people, some of it to do with the tariffs imposed by the United States, some of it having nothing to do with the tariffs that have been imposed. But is that what is making people perhaps hold out a little bit?
Yeah, I think overall, this year, all the headlines in social media were not, are we going to have a recession, but how bad is the recession going to be? And I think that's lingered in people's minds. Like if we can't really measure uncertainty. I always say like no one wakes up in the morning and checks their Apple Watch and says, oh my gosh, my uncertainty's hit 1,600. Like we have these measures of uncertainty, and they show that uncertainty's faded, but it's not really like a thermostat, right? It's kind of off and on. It's a light switch. And there's just a lot of uncertainty still, and I maybe that's the one thing we can point to. It's the one thing that's different from the end of last year. Like there's not really anything different from November, December 2024, and December 2025, except we've had this year of uncertainty and this looming kind of tariff threat. Maybe that's the differentiator, and maybe it's just that's holding back Metro Vancouver more than other markets.
So when you look at other markets, I mean, Vancouver and Toronto have always been, I guess, more or less similar markets in that it's the two highest priced housing markets in the country. What's happened to Toronto then compared to Vancouver?
Yeah, it's really interesting. So Toronto, sales there are still weak. But they've come back a little bit stronger than Vancouver. Like the recovery there has been a little faster than in Metro Vancouver. The real difference in like Vancouver and Toronto is prices. If you look at prices, especially in the condo market in Toronto, they're down 20% from when they peaked in 2022. In Vancouver, prices have been far more resilient. So we're talking about a 25-year low in sales. Prices are essentially flat. And in the apartment market, they're down maybe 2 to 3% from 2022. So it's a very, very different market. Similar effects on demand, and Toronto's probably actually been a little bit stronger in terms of its sales recovery, but very, very different outcomes in prices.
I'm looking at numbers that say the asking price for a one-bedroom apartment in Metro Vancouver was down 9.5% from the same time in 2023. Is that the case?
It depends on what you're looking at. So if you look at like the HPI for the apartment market in Vancouver, It's probably down. It peaked actually like 2024 and is maybe
Right.
down 3% from there. I'm not sure which data exactly you're looking at. The average price over the course of 2025 for apartment markets is down a couple percent.
Right. According to the Bank of Canada, about 60% of all outstanding mortgages in Canada are expected to be renewed either by the end of this year or next year. Is that going to be a factor at all when we see home sales?
Yeah, about 30% of those mortgages already renewed in 2025, and we didn't necessarily see much disruption in
Mm.
households. We didn't see a huge spike in listings. What you would expect if people couldn't afford their mortgage payment, and the average mortgage payment for someone with a 5-year fixed mortgage in 2025 went up about 15%. But we didn't see like a spike in listings. Who couldn't afford that payment have to list their home. In 2025, 2026, we're going to see another about 30% of mortgages renew. About 13% of outstanding mortgages are going to renew at a payment that's on average 21% higher. Um, uh, but the average increase is only about 5 or 6%. So that could cause some issues. We looked at like what markets in BC are the most vulnerable to renewals, and it turns out, if we looked at like which markets have the highest share of owner households with a mortgage,
Hmm.
and which markets have poor affordability already. And it's really markets in what we call the Fraser Valley Real Estate Board, which is Surrey, Langley, and Abbotsford, have a
Right.
little bit more vulnerability. Squamish is up there. Squamish, I think the share of owners that have a mortgage is about 73%, and
Mm.
affordability is pretty strained. Contrast that with a market like the city of Vancouver, where 50% of households don't have a mortgage, owner households don't have a mortgage.
Right.
That renewal shock's going to hit some of those like younger demographic markets like Surrey, Squamish, a little bit harder perhaps.
Right. Brendan, really good to hear you this morning. Thanks for the time. We appreciate it.
Thanks for the invite anytime.
Okay, take care. That's Brendon Ogmundson, the chief economist of the BC Real Estate Association.